Well, my presentation is not going to be that much of a case study as much as it is an overview of M&A activities and where we believe the new growth areas and drivers for M&A will be. Plus a quick overview of lessons learned from the globalization exercise that STC went through. STC is Saudi Telecom company, for those of you who don't know us. The company started going outside the Saudi market in about 2007 through a series of acquisitions of existing companies and greenfield operations in Asia, Southeast Asia, Middle East, and South Africa. The revenues of STC stood at about $14 billion in 2010. The global telecoms M&A activities are starting to come back after a quiet period during the economic downturn. And the activity is back up, or was back up in 2010. We're seeing some more M&A deals planned to happen in 2011, so there is a bit of revival. Although a little shy and nowhere near the levels of 2005 and 2006 global telecom M&A activities, which reached in the region of $192 billion at the time. So in 2010, we were around $64 billion or so. A similar, slightly higher figure is expected in 2011. As the GDP, the global GDP grows, we're seeing a revival of mergers and acquisitions in the telecoms industry. And these are in-market as well as cross-market activities. So I wanted to just share some thoughts with you today as to why is that happening, what is exactly happening, and where is it happening. Well, globalization in general has proven to be quite lucrative for the telecoms industry. Here, a quick analysis shows us that global operators have achieved much higher returns than the average S&P Telecoms Index of 1,200 or the S&P 500 Index, and much, much better than those who actually stayed in a local market or a small regional market. So definitely globalization and expansion through inorganic growth into new markets has served the infrastructure telecoms industry quite well. Going forward, we also expect further consolidation, whether in-market consolidation or across geographies. Other industries like healthcare, automotive, energy, etc., on average, the top 5% of the players in those industries have more than 78% market share of that industry. The telecoms industry is still at around 62%. So there is room for further consolidation in the telecoms industry, particularly driven by all the challenges that we're facing today. One, cost challenges with increasing competition, lower prices, tougher regulations on basic and traditional services, the emergence of over-the-top players squeezing the telecoms industry margins, forcing us to deploy more infrastructure in order to accommodate for an ever-increasing traffic to access over-the-top sites. So effectively, that is driving further consolidation in market and across borders. Now, emerging markets have been the focus of the telecoms M&A activities. Most of the activities that have happened in recent years have been looking at emerging markets. And if we look at the breakdown, Middle East, Africa, and Asia and Latin America, in 2005, 2007, totaled around 30% of M&A activities, while in 2008 to 2010, we're looking at double that figure. So a lot has shifted in terms of activities on M&A to emerging markets. Obviously, given the growth prospects in those markets, a lot of these M&As have been actually acquisitions more than mergers, but then there were a lot of in-market mergers and consolidations as well, given the low-margin nature of these emerging markets. However, the long-term growth prospects have been quite attractive in them. These markets are likely to lead the next wave of consolidation as well, following the footsteps of developed markets and what we have seen in Europe as well as the United States. We look at the mobile subscriber share of the top 10 telecom operators by region, and we find that in North America it is much, much more consolidated. 84% of the mobile market share belongs to the top 10 operators in North America, whilst in Africa, Asia Pacific, and the Middle East, we're still below the 50% mark. So there's an awful lot of potential there for in-market consolidation as well as cross-border consolidation. Now, of course, as I mentioned earlier, growth prospects in these markets will continue to encourage operators to move into that space and that territory. If we look at GDP comparisons between the year 2000 and the year 2030, and where this growth is going to come from, we look at other markets around the world outside US, Japan, and Europe, growing by 145% from the levels we saw in the year 2000. That's in terms of GDP. If we look at the top world economies by 2030, they're going to be China, USA, India, Brazil, Indonesia, etc. Those who rank number 1, 2, or 3 today are going to change ranks by 2030. And that is also a main driver for interest in emerging markets, investments, and acquisitions. We at STC have been operating since 2007 in multiple markets. You probably know us under different names, under Maxis in Malaysia, Aircel in India, Cell C in South Africa, Access in Indonesia, Turk Telecom, the incumbent operator in Turkey, Aveya, the mobile operator in Turkey, Viva Bahrain and Viva Kuwait, more recently as greenfield licenses, third operators, and of course, STC Saudi Arabia, the mother company, incumbent operator, both fixed and mobile in the Saudi market. Today, over 110 million subscribers across the globe, serving fixed and mobile, predominantly a mobile customer base. Now, with that set of activities, between 2007 and 2010, most of these countries were covered, either through majority share acquisition or joint control acquisitions with other partners in various markets. Now, the reason I showed you this just brief picture of our international footprint is simply to try to gather from it some lessons learned on how has this globalization served us and what kind of things we learned from it in terms of operational learnings and operational activities. 4 simple things. For internationalization success through M&A, inorganic growth, there are 4 key success factors that we managed to summarize from this experience. 1 is scale. Scale gives you access to new cultures, new ways of doing things, new understandings of markets. Not every market is the same. Not all mobile users are the same. There's a large range of various consumer behaviors around the world that you gain access to through scale. Obviously, economies of scale are among the most important synergy activities. Being a large group, having a large footprint, allows you to negotiate global deals with smartphone suppliers, with handset suppliers, with infrastructure suppliers, with partners on content, applications, etc. So that gives you a great deal of potential efficiency creation through scale. Coherence of footprint. That's another very important aspect. Coherence of footprint in terms of looking at the world as clusters. Footprints in markets that have complementarity, either cultural affinity or trade relations or any kind of linkages that induces telecom traffic and business transactions. That creates opportunities for roaming products, for trade, for mobile payment products, for developing services for expatriates from one market living in another market. As a simple example, if you look at the neighboring markets closer to Saudi Arabia, there are 7 million Saudi nationals or residents that visit the country of Bahrain every year. And that's a huge number compared to a country the size of Bahrain. So by having the license or the third operation in Bahrain, we managed to create immense synergies between our Bahraini operation and our Saudi operation. The third point is knowledge. This is usually overlooked most of the time. This is very intangible. Having access to knowledge from multiple countries and multiple markets is extremely important. Understanding the behavior of consumers in different markets, getting ideas from various markets. What works, for example, in one geography in Asia may be transferable to Africa, may be transferable to the Middle East, and vice versa. When you start sharing knowledge at a group and global level in a very systematic and organized networked environment, and when I say network, this is a virtual people network that brings experts in the company together to share knowledge and work together on innovation and creativity. This is where you get innovation in products and services, in business models, even in terms of funding and having terms and conditions on dealing with banks on a global relationship basis. By simply sharing the knowledge of corporate finance across the group, that also gives you a great deal of advantage and value to the group. Last but not least, governance. Without proper governance, things could get out of hand very quickly. Telecom operators are not in the business of investment portfolio management. Effectively, we're not asset managers, and we're not investing on behalf of our shareholders in Telecom's assets. When we globalize, we're investing in operations that create value and that bring shareholder value through operational improvement and enhancement and serving our markets in the best possible way. So having the right governance structure is very important. Understanding the relationship with local shareholders or global shareholders and partners and having a clear control over that relationship is essential. Also governance in terms of managing these assets and having a structure that enables local operations to maintain flexibility and independence while managing that relationship through collaboration and cooperation, through a democratic process, more or less, across the group, as well as maintaining certain levels of control through board representation and shareholder rights within each company, is also extremely important to drive the business, to know who makes a decision on business issues, on driving companies forward, on setting the vision and on executing against that vision and against the group strategy. So having the right governance mechanism on the legal side as well as the management side and human capital side, managing global careers and understanding the relationship of headquarters versus operating companies across the globe is of extreme importance. So I do hope with this short presentation and discussion that I managed to convey to you some of our lessons learned and some of our thoughts in relation to mergers and acquisitions in the telecoms industry. And I do look forward to a very interesting discussion that we're going to be having in a few minutes shortly. Thank you very much for listening.